whether it's evolution or changing the world. We're going to be involved in that here on the Freedom News Hour. And to take the next step in that direction, I'm going to turn the mic over to Jake, who's going to introduce our guest today.
Yeah, today we have Bill Murphy joining us, and Bill Murphy is the chairman of the Gold Antitrust Action Committee, which is found at GATA, GATA.org. Bill is the proprietor of LaMetropoleCafe.com, which is a financial commentary website. He is a former commodities trader and also a former wide receiver for the New England Patriots. Bill, are you with us?
Yeah, great to be here, Jake.
Hey, thanks a lot for joining us today.
My pleasure.
Hey, I was wondering if you could start off. Our listeners have probably never heard of GATA before. If you could just describe for our listeners what GATA is, its purpose for existence, and also how it was formed.
Yeah, well, first of all, you can thank the U.S. financial media for so few of your listeners knowing anything about us. But the Gold Antitrust Action Committee, GATA, was formed in January 1999 to expose the manipulation of the gold and silver markets by what we call a gold cartel, which consists of the big bullion banks, J.P. Morgan Chase, Goldman Sachs, and our Fed and Treasury, and with others, people like the Bank of England, and we've actually made a lot of progress over the years. We've had 3 major conferences, and the Russians have been there. We've had conference calls with the Chinese. It seems like everybody wants to speak to us, but the Wall Street folks and our government.
Well, yeah, sure. So GATA claims that the central bank suppressed the gold price. I was wondering if you could explain to our audience in layman's terms, first of all, why would governments, seek to suppress the price of gold? Why is gold not just a pretty metal used in jewelry? And also, how do they achieve this price suppression?
Okay, good questions. Well, to keep it simple for your listeners, what happens every time the price of gold soars? What does the media say? They say it's about inflation, it's bad for the dollar, there's a crisis. So every time the gold price is taking off, it's bad for Wall Street and it's bad for the incumbent administration. And in addition to that, many years ago, Larry Summers wrote a paper while he was at Harvard called Gibson's Paradox and the Gold Standard, in which they correlated the relationship between gold and interest rates. So why do they want to do it? In addition to that, they want to keep gold down because it's a direct competitor to the dollar and also affects interest rates. So what they've been doing over the years is secretly selling central bank gold from the vaults of different central banks, or had them sell it. People think that the establishment says that the central banks have 30,000 tons of gold. But through our work of 3 great consultants, they have well less than 15,000 tons. They're running out. And we said this would happen 10 years ago, and it's what's happening. Even what is known officially, the European central banks were sellers till last year, and they were selling 400 and 500 tons a year. They stopped selling. So what's happening now, and people say, well, what kind of suppression is it when gold goes up 10 years in a row? And what has happened is all they can do now is what we call a managed retreat. Every time it gets too much excitement, they calm it down, and then it goes up again, down again. So right now we're going through another corrective phase, and as soon as it's done, it'll go right back up again and make new highs because the physical market is on fire.
Yeah, it also probably has a lot to do with the money printing of the governments. And Congressman Ron Paul has been named as chairman of the subcommittee for the United States Congress on domestic foreign monetary policy. And Dr. Paul has long been a supporter of competing currencies, and he has even referred to the gold price as, quote-unquote, rigged. I was wondering, what are your thoughts on the effects that Dr. Paul could have on monetary policy in the Fed, and also what are the suggestions that you would have for Paul as the chairman of GATA?
Well, first of all, Congressman Paul knows all about GATA and has followed us fairly closely. And, of course, it's an incredible development because he's in a powerful position now, and he's very passionate about his views, as I'm sure your listeners know. Whether they, agree with him or not, he's a principled guy, and he sticks to them. And it's a very exciting development for us because right now we're suing, GATA is suing the Fed to declare what they've been doing regarding gold. And we've been at it a couple of years now, and just this week we won a minor win against the Fed. The little guys against the big guys, because the Fed is trying to get rid of our lawsuit via a summary judgment, and the judge in the case disallowed it and is ordered by, I think, tomorrow for the Fed to turn over camera-ready documents for her to look at. So it doesn't mean we're going to win the suit yet, but we're in the game, we have a victory against the Fed. They've got to be very unhappy about it. And between what Ron Paul is doing in his position and what we're doing, you never know. But just if your listeners, the way we look at it is that this is a big, big deal, and that our government would rather divulge our nuclear secrets than what they're doing in the gold market. Because if we're correct, at least half the U.S. gold is gone.
Yeah, I was just going to ask you to clarify that. You're actually saying that half of the gold that the U.S. has been holding all this time is now gone.
Yes. The U.S. government, first of all, it says they have 8,133 tons. Second of all, via Congress, the United States is not allowed to sell any of its gold without the approval of Congress. But this is where it gets into technical stuff like what they call gold swaps, where they could swap our gold with another country and then sell their gold to suppress the price. So technically it's not sold. Our gold isn't sold. We sold somebody else's gold, and we owe them the gold back. So we think if there's Congressman Paul wants an audit of the Fed, and if it's a true audit and they go into the details of whether this gold's encumbered, we believe what we learned that much of the U.S. gold is no longer there. And, of course, that's supposed to be the backer for our dollar, among other things, and our currency. And it would shake things up big time were that to come out.
So more accurately, the gold is there; it just doesn't belong to us anymore. It belongs to somebody else.
Yeah, it's complicated, but basically, we suspect that an audit will show that our gold is, using a technical term, encumbered, and maybe not all of it. But we don't know. A third to maybe 2/3. It's just it's not there anymore. It's gone. They've used it over these last years, and a lot of it started with Robert Rubin and his strong dollar policy. Many of your listeners may remember that term, and he always used the strong dollar policy. Well, I went around for years and said, would someone tell me what the United States has done to affect the strong dollar policy? Would you please raise your hand? I never had one person tell me what they actually did for the strong dollar policy. So I raised my hand. I said, well, what they're doing is that they're selling gold to protect the dollar. That was the linchpin of the strong dollar policy.
Right, it's mainly just a lot of verbal jawboning over the years. But you spoke a little bit about the lawsuit that is pending under the Freedom of Information Act concerning data at the Fed and the Treasury. And you mentioned besides the whole gold vault holdings and everything, what's the progress and what's the next step that's going to occur with this lawsuit?
Well, as I mentioned, we got this ruling, and the judge is now looking at documents. Then she's got to make another ruling of what she's going to do from there. We've asked through our lawyer, and this is in Washington District Court, the Fed to answer 25 questions, which in essence, when they submit it to this court, I mean, it's virtually under oath. So if what they want to do is not deal with the question, because if they don't answer it correctly, somebody could be in real trouble down the road. So we're hoping to get this information about the U.S. gold market divulged to the public.
Right. So the next, what I had heard from the lawsuit is that the judge has requested the Fed to reply on these questions to her privately, so you won't have access to the questions right away.
Yeah, we don't know how this is going to unfold, honestly, but we just know we have a small victory that which is we're very happy to have, considering who we're up against, and you never know while the judge could rule on this. It's a very exciting development, and we just hope it goes our way.
Yeah, no, transparency would be great. And again, just for our listeners, this might sound like a little bit of out there in that, but when you really go back into the 1960s, between 1960 and 1968, the United States government was involved with something called the London Gold Pool, where they did exactly what Bill is alleging here. There was a pool of gold that was dumped on the markets to suppress the price, and eventually the money printing that went on led to a eruption in the gold price during the 1970s, and also the breakdown of the monetary system that was tied to gold in 1971, the Bretton Woods Agreement, when Nixon closed the gold window. So we do have prior historical precedents for this.
Jake, this is what gets GATA. The mainstream gold world is against us. They say, oh, this is not happening, even though we have 10 years' worth of evidence and it all fits together. If anybody watched the gold market the past 2 days especially, you know something's very wrong. It just doesn't make sense because, as you just said, the gold price was rigged for years. It was just done in the open. And what GATA discovered by by accident, really, is we stumbled into it, is that this time it's being done surreptitiously. And if somebody watches the gold market closely, it's so easy to see. The good news is, when we started, the gold price was about $280, and now it's under $1,400. But we've been saying for years, as you well know, Jake, that we're looking, at least I am personally, for $3,000 to $5,000 gold. So there's some real opportunity here for your listeners to get up to speed on this subject.
Bill, I'm sorry. Clarify one point. You were talking about how the gold. And I just lost the point. Go ahead, Jake. I lost.
No, sure. One of the effects of money printing or the quantitative easing policy of the Federal Reserve is really to suppress interest rates on the government debt, particularly. However, the latest round of what they call QE2, which we've talked about on our show before, has failed to noticeably drop these interest rates. So my question to you, Bill, is, if we were to see a sharp rise in the yields on U.S. Treasury bonds, what would this signal mean to you, and also how would you expect the gold price in dollars to react?
Well, again, in a manipulated market, it's hard to always know, because the gold cartel, as we call them, does what they want to do. But at the moment right now, the big talk around the investment world is how inflation is starting to soar all over the world, in the United States and in other countries. I mean, you go to one thing after another in terms of recent highs, corn and soybeans and oil and the price of copper, and things are starting to surge, and it's creating actually an explosive environment for gold and silver, because the Fed is still keeping interest rates where it's been for some time, and they're forcing the interest rates to be too low. Now, at some point, as this continues, it's hard to imagine that these interest rates aren't going to go up no matter what they do. And there's two ways you can look at it. In the 70s, these rising interest rates, which led to the gold price explosion. And that's what Paul Volcker put a stop to in 1980. But for years leading up to that, the interest rates were going up, and gold was going up with it. So in a free market, higher interest rates signals higher inflation, which means more reasons to own gold.
You just reminded me of the point I was trying to raise. You mentioned earlier about how if anyone who has watched what's happened with gold over the last few days can tell that there's something going on. Could you elaborate on that? Because a lot of people don't necessarily watch the gold market who are among our listenership the way that you do.
Well, it's a good question, and the easiest way to explain that is that a lot of people believe that a dollar weakness is very supportive for gold. It's just what the mainstream gold world constantly tells everybody. Even if it's not true, that's what they're saying. Well, the past 2 days, as I just mentioned, commodity prices were flying, the dollars got killed 2 days in a row, and gold has got battered, and silver has been battered, especially today. I mean, after the commodity market closed, which is the main gold and silver markets, and when it never went to more thinly traded areas, they just killed it. And this is just not natural the way markets trade. So if there ever was a time, a day, a couple of days when gold should have just soared and it looked like it was going to, it was the last 2 days, and instead it went the other way. And it's so obvious, it's ridiculous.
So the suggestion that you're making is what happened over the last couple of days is that the banks continued with their policy of dumping gold, and they just dumped a whole bunch more of it.
Yeah, gold and silver, and at a time when you think it would be going up, they just leaned all over. And, of course, then it starts to change the sentiment and so on, and people, speculators start to sell, and people turn bearish. We've been through this for 10 years, and they go through the cycle every time, and the cycles are getting shorter and shorter because they don't have the physical gold and silver to keep at it. As the prices go down, it stimulates more physical demand all over the world, and right now it's on fire, and the big Asian money's buying up gold and silver. They can't keep it down, but they can rate it, and they can keep things under control for a while.
Yeah, Bill, you mentioned silver, and then for our listeners, of course, silver is also a precious metal, and it's also allegedly suppressed. Yet in 2010, what we saw was the silver price shot up by 83%, so it nearly doubled. So I was wondering if you could comment on, why or how do you think silver has managed to rise by such a large percentage, despite, this alleged market manipulations?
Well, first of all, they're starting to hit the wall with silver. It's much tighter than gold. It's extremely tight supply, and I think it's explosive. You could see, but to answer the question better, in March 25th of this year, I testified in front of the CFTC, and it was a webcam thing broadcast all over the world, actually. But the funniest thing was they had all these 15 people testifying, and the only testimony that was blacked out was mine. Everything worked. They said, "Here's Bill Murphy," and it went blank, and as soon as I went done, it went back on again. But what they didn't know was we had a surprise for him with one of the commissioners, Bart Chilton, agreed to give me a softball question, and we had a whistleblower who they wouldn't let testify, who had me read and had the exact emails he sent to the CFTC how J.P. Morgan was manipulating the silver market, and he told them when they were going to attack and what was going to happen. These are emails in advance, and it happened. This got spread all over the place. And the next day, this guy, Andrew McGuire, who gave me the testimony, he and his wife were hit by a car in London, and the guy tried to get away, hit 2 cars, helicopter chase. So, I mean, this is serious stuff we're talking about here. I mean, what are the odds of me getting blacked out and then him getting hit by a car the next day? I mean, but anyway, the price of silver was $16 then. But what happened was in this testimony, we alerted the world to what was really going on in the silver market, and that J.P. Morgan doesn't have the silver to back up their massive short position. So big money, as this spread around the Internet, the mainstream doesn't want to talk about it, but the Internet did, and the big money know what GATA knows, and so it went from 16 to 31, and now it's back to 28.5, 28.75. So the bottom line is the bad guys, as I call them, don't have the silver to stop this thing from exploding.
We've long speculated that it might have been J.P. Morgan, but you know that for a fact.
Well, it's a fact in the sense of their you can deduce that easily. It's a little complicated from the banking report. Say, yes, it's J.P. Morgan is the big silver short, and HSBC is the big gold short. I mean, it's just, they're massive short positions, and they're concentrated. And, of course, this shouldn't be allowed in free markets. That's why you have these laws about things like this, and yet, J.P. Morgan's the Fed's bank. It's talking about fighting City Hall.
Yeah, Bill, I was wondering if you could comment on today's price action, because as you had mentioned, in general, when the dollar was rising, gold and silver would fall and vice versa. And also in past years, gold and silver had almost kind of moved in a rough tandem. One would go up by about the same amount of percentage. But if you take like a day like today, the U.S. dollar index fell by about 1 point. The price of silver was down about $1, which is about 3%. And gold was down also by, maybe a percentage point, $15 or so. So I was wondering, how can you explain such price action out there? What is there a true interplay between like the physical market and these paper contracts?
Well, that's what I was explaining earlier. If everyone wants to see at a time when you can see the manipulation at work, it was yesterday and today, and it's what these people are able to do short term. They use what they call derivatives, which are futures contracts and options and so on, and they can bomb the market short term, and the physical buyers back off, and they turn the market, they take it down, then it increases the physical demand, and the buyers, because the buyers want to buy it cheap, and they know what the tactics of these people, so they wait to see how much they're going to attack, and then eventually when they need to fulfill their cash needs, they start buying, and the thing turns around. So, short term, anything can happen. But for me to be correct, or I'll speak for the GATA camp, it's gotten to a point, especially silver, where this cannot stand. They can just make life miserable for the people that are long gold and silver or investors, and turn the tide for a while. Then it's going to go right back up, and it's going to be very exciting. And the irony is that it's gone up 10 years in a row, and most of the American public don't own gold and silver or are not invested in the gold-silver shares. I'm sure not many of your listeners are.
It's interesting you mentioned derivatives, because I think most of the American public associate derivatives with the real estate market and what happened with the mortgage crisis and so
That's
forth.
Right.
But derivatives get used in a wide range of investments, and gold and silver being among them. Go into that a little bit more detail. How does that work, and how does that play into the whole manipulation thing?
Well, specifically for gold and silver, you have, people that are long a contract where they think the price is going to go up, say 100 ounces of gold, and somebody's short, and they're traded on exchanges, and they're traded over the counter market, and those are called derivatives. And what a J.P. Morgan can do is when they're ready and get their other people that are involved with them that are moving the markets illegally, they just can start selling these derivatives. And, of course, then the longs back away, and some of them want to either protect profits or not have more losses, and so the paper price goes down. And then it affects, as I mentioned earlier, it affects the physical buyers, because once they see this happening, they go, well, geez, I'm going to back off here because I want to buy this as cheaply as possible. So they can get things going, and they can, there's technical traders that go by moving averages that buy and sell things, same as in the stock market, and it affects psychology and what people do, and it goes through these cycles. But because they don't have enough physical gold and silver to last a long time, it get used up. If the price gets too cheap, they have to back off. So they get the speculators to sell, then they cover some of their positions, and the thing happens all over again. But at some point here, especially silver, it's just going to go berserk. And there'll be nothing they can do about it, because the physical market, the big buyers will say, we want the silver that's left. And they won't be able to cover their short positions.
So basically what you're saying is that the derivatives themselves aren't necessarily a problem unto themselves. The only reason that they're a problem, and it's a very good reason, is that the banks that are playing these derivatives, that are basically using them to manipulate the prices, don't have the metal to back it up. And if they were held accountable like any other investor was, the derivative itself wouldn't be a problem. It would just simply be a mechanism to drive the price up immediately. But that whole effect is being held off.
Well, it's a problem, again, think of our name, Gold Antitrust Action Committee. That's the reason you have antitrust laws in the United States. It's just a violation of those laws. Mm-hmm. It's when they're used in concerted activity with others and done illegally, that's the problem. Nothing wrong with the derivatives market, it's just what they're doing with it. And as I mentioned earlier, these massive short positions are a fraud. I mean, J.P. Morgan's telling the CFTC that these positions are what they call hedged, meaning their derivative short positions are backed by the physical metal. We don't buy that for a second.
Well, one of the things, gold late last year hit an all-time high of around $1,431 an ounce, or what we should call perhaps a paper ounce. But what's interesting is, even though it's down maybe $50 from those highs, currently gold's at very close to all-time highs when denominated in euros. Mm-hmm. The dollar, and one of the themes on our show is, the dollar and all the other paper currencies, whether the euro, the yen, or the Chinese yuan, they're all depreciating roughly in tandem. So the question for you, Bill, is, what do you believe is likely to happen in the future with this failed monetary system? Will there be hyperinflation, a breakdown in the euro, or will we see more consolidation of paper currencies like the European Monetary Union?
It's a mouthful, but in general, I think we're in deep trouble that we're going to have hyperinflation. I think our standard of living in the United States is going to go down about 30%. You're right. Everybody's a race to the bottom for the currencies, and of course, this is why gold stands out. But I think we've seen the beginnings now of some very serious inflation issues, and we're in trouble in the United States. I mean, a lot of things that I'm sure you report on all the time. I mean, about the debt of the average person, but more importantly, the debt of the country, the debt of the states. Not everyone, but just because of what's happened, many people I'll speak for the country mostly, living beyond its means. And you know all about the deficits and all this stuff, yet they never do anything about it. It's always going to be mañana, the year down the road, 2 years down the road. And it gets worse. Well, what happens when we get to a year or 2 years down the road and things haven't improved? I mean, the unemployment situation, there's ridiculous numbers of the other day, isn't getting much better. The housing situation is still pretty tough, and I think it's going to get pretty scary.
You were saying 30%, so you're talking about a 30% reduction in the standard of living, which is another way of saying a 30% increase in the cost of living.
Yeah, well, I've been saying this. I'm no expert on this stuff, but just basically, I've been talking about this for years, and I see this coming where people just can't afford things like they used to. There'll be one car instead of two, one TV instead of two, Be hard to keep the vacation home. People will move back home with people. That's sort of starting it because can't afford things. Look at the low interest rates, good to stimulate the economy, but look what it's doing to senior citizens' income. I mean, they've got prices going up, which we've just discussed, and they're starting to accelerate, and yet they're not being compensated by getting higher interest income.
Give us a time frame for that 30% decrease or increase, depending on which way you want to look at it.
Well, it's going to be a gradual thing, but I would say over the next 5 years.
5 years, okay.
All of a sudden, people can say, you can't afford to do this, can't afford that.
And meanwhile, of course, they're going to report that the CPI is holding about 1 to 2% because it's completely a manipulated figure anyway. They're basically going to put all these numbers out that say that everything is fine. We're just holding against the storm. We're recovering. We're basically rebuilding the economy again, and everything's going to be fine after a rather painful rebuild process.
Yeah, it's just like the Stepford Wives. I don't know if you remember the old movie. Everything's fine. And the ladies are going, everything's fine. Everything's fine. It's not fine.
Well, Bill, thank you so much for joining us and sharing your insights, because this has been very enlightening. I was particularly interested in what you said about how about half the gold is no longer in U.S. control. That's the gold that we used to have anyway. That's really quite enlightening, because there's been a lot of speculation over the years about that, and I found that figure very interesting.
As we mentioned, we're not just throwing this up against the wall here. We had 3 guys who'd used GATA consultants using 3 different methodologies, and that's what they all came up with, and it was very sophisticated stuff. So, and it all fits into everything else we've learned. So, all I can say is for your listeners, there's some real excitement coming in gold and silver in the year ahead, and I hope they can get up to speed and look at it at least for protection purposes. And I presume, well, I shouldn't presume. What do you think is the best way for someone who wants to try to protect themselves and take on some gold and silver? What's the best way to do it? Do they actually take control of the metal? Do they do it through paper? What's the best way? Well, it depends on the risk and comfort levels. It's always good to have some gold, some silver, and there's some really, right now, some of these gold and silver stocks, or some of the smaller ones, are really beaten up. You can get a basket of them, and if I might say, the best way to get up to speed is to take a 2-week free trial of my website, lemetropolcafe.com, and it's free, and then you can see if that kind of information input's of value.
Yeah, Bill, thanks so much for joining our show. I did have one last question for you, and I had mentioned at the beginning that you were a wide receiver for the 1968 Patriots, now the New England Patriots. So I was wondering if you had any predictions for the Sunday's playoff game against the Jets.
Well, obviously I'm prejudiced. But
and you got to be careful, because PRN is based in New York.
And it certainly is a big rivalry between their coach mouthing off and some of the players going back and forth. So it's going to be a pretty exciting game. So, but I was so long ago when I played. It was the Patriots played at Fenway Park.
Wow.
Yeah. Wow. So I hate to date myself, but that's the way it is.
So you played in the bandbox.
It was fun, and all the stadiums they played in were down except Fenway. The Orange Bowl's down, the Astrodome down.
Yeah, that's true.
That's the way it goes.
And so, just one. Thank you so much again for joining us. I was wondering if you could. You mentioned your financial commentary website, lemetropolcafe.com. But I was wondering if you could also tell our listeners where they can learn more about GATA and the gold market.
Well, the gold market is what I write about every day in that column. But in addition to hopefully signing up for a 2-week free trial there, they can go to www.gata.org. And my colleague Chris Powell's the Secretary-Treasurer of GATA, puts out all kinds of emails and stuff, and they can learn a great deal about the market that way also.
Yeah, I'll also comment, they have an excellent DVD off their website, Gold Rush 21, where it kind of goes through all this, I think from a conference that was maybe 5 years ago or so up in the Yukon area.
Yeah, and it was a magical conference, and as Andrei Bykov, President Putin's economic advisor, was there and said it was the best conference he was ever at. The price of gold was $4.36 then, and almost everything we've talked about at that conference has occurred.
Wow, amazing. Well, Bill Murphy, thanks so much for joining us again today here on the Freedom News Hour.
Thanks, guys. Bye-bye.
And we'll be back after these messages.
But when you talk about destruction,